Good morning, everyone, and apologies for the issue with the network. I may have to take it over from here. Can you guys hear me? Amadara, can you hear me?
Yes.
Okay, thank you. So Didiolu, I saw your chat that you couldn't still you couldn't get the email I sent out. So I'm going to resend it. After this class, I'm going to resend it.
It wasn't me.
Okay, I thought it's Amadara that said it. Didiolu, you got your own, right? You got the email.
Yes.
Okay, so please just tell your brother or is it your sister or mother? Is a mother a girl or a boy?
Boy.
Okay. Please, Omodara, I was saying that I will send that email again. I sent it, it's still in the sent box, but I'll check it again and resend it to you. Okay, so
Okay.
today's class we are talking about smoothing house market noise. So we are looking at the noise in the market and we try to smoothen that out, reducing the noise and focusing on what is important in the market. So what is important for you as a trader in the market, that's what we're going to talk about. So I'm just going to be doing like a top-down analysis approach, a simple approach that you can use to analyze the market on your own and know exactly at what point you're going to be entering a trade. You want to understand what you're looking out for in order for you to know whether to buy or to sell. All right. So in that case, let me share my screen. Okay, so usually we analyze the market using a price chart. And however, if you open up your chart, you probably may get confused, especially as a new person in the market. You open up the price chart and then you see that the price is moving in such a way that you see, a sharp move, it drops again, it moves up, and you may be confused. So what do I do exactly? Do I want to buy here or do I want to sell? This is now around the resistance. The price doesn't just move like one straight way all the way to the upside or straight all the way down. It gets to a level and you just realize that, okay, this trend, for instance, around this level, this is what we call noise in the market. The price is just ranging. There isn't a clear indication what direction the market wants to do. It's just ranging, going sideways, high, low, high, low. So what do I do? How do I filter out this noise? How do I know a good time to enter, to buy, or to sell? So I'm going to be showing you a simple step that you can use in analyzing the market on your own and know exactly the kind of trade you want to take. So for example, let me bring out the paints. So this one now is during my session this morning, I was sharing my top-down approach to the market. And so the first thing I'll do is fundamentals. Why fundamentals and what is even that? There are three ways of analyzing the market because a lot of the time we just focus on using this price chart. We open up the price chart and we try to analyze the price chart using that to make all our trading decision and everything. However, it is important to start with fundamentals, have an idea of what is happening on the in the different markets. So let's say I want to trade this particular instrument. This is Euro NZD. For Euro NZD, I am trading a currency I'm trading two currencies from different countries. The European area is they are the ones spending the euro. The euro as a currency belongs to the European area, right? And then NZD belongs to New Zealand. Now I can decide, okay, I'm going to look at what's happening with these two countries, the different markets, what's happening with the economy. So what do? I can go to the economic calendar. So XM offers economic calendar. If you open xm.com or any other broker that works in your area, I don't know if XM is working in, for those of you joining from Canada, XM may not be working there. So you can choose whatever broker is working fine for you over there. I know XM is also part of trading points. All right. So maybe trading point is what's going to be working there. Whichever broker, they offer economic calendar. But if your broker is not offering economic calendar, you can go to forexfactory.com. All right. But I like to use economic calendar of XM. And if I log in from the back office, I click on market intelligence. I'm going to go to economic calendar here. And I'll be able to see what's happening in the different economy, what's happening, especially within this week, the news that are planned for the week. And I'm going to filter for high impact. So this impact, this is the level of impact. This one showing red means high. The impact is usually high. I can filter for medium as well to see both the high and the medium impact news. I can filter to see everything. There's also low impact news, but I don't bother about that. I also don't bother much about medium impact. So I'm just going to focus more on high impact. Now, if I see the high impact, I'll look at, so let's say I'm a day trader, I'm focusing on just today. What high impact news do we have today? Mainly the US dollar. Earlier today, we had something for GBP or the UK, all right, that has to do with the inflation. So I look at it, the inflation level in the UK, how is it likely to affect price? So I see the level of inflation was 3.4, and it is expected, the forecast was that it was going to go to 3.5, but it did go all the way to 3.6. Now that I have that idea that it is higher, how do I trade it? But this is coming after the news now. Before the news, you're not going to see this actual. It is during the news that when the news comes out, which is 7 a.m. Nigerian time. I've set this one for Nigerian time. You can set it for your time depending on where you're joining from. So you set it for your time and you are going to see when that inflation report is going to come out. So okay, inflation can have impact on the market. What kind of impact is it expected to have? When inflation increases, government usually will come in and increase interest rates. And with increased interest rates, the value of the currency is expected to rise. So when inflation is increasing, the value of that currency is also expected to increase. And especially when it is higher than the expectation, because the expectation is already somehow priced into the price that you see in the market. So if it now comes out, it's higher, you would see that YOY, which is year over year, the core inflation is higher than the expectation. The real nominal inflation is higher than the expectation, which means that we expect that to rise. However, month over month, it's a bit lower than the expectation, but still higher than the last one. In that case, I want to see what kind of impact does it have on GBP. So I might look at GBP yen. During that news, what happened? Nothing much actually, but GBP is still the stronger one. And I'm seeing a pattern that is supporting that the price may go up. In that case, what do? I look for buy with GBP. Now, I have an idea what is happening in the news, or maybe what time of the day that news is going to be. I necessarily don't need to even over analyze and say, oh, what is this inflation going to do to the price and all that. And necessarily do not need to know all of that before I can trade. What is important is as you come into this, because the reason you have to check this is because the market, all these high impact news, they would make the market volatile. And what would we call volatility? The price goes up sharp now, comes down sharp again. So the price can just go this way, go that way, not giving you a clear direction, or even if it's moving mainly to the upside, it may be very fast. All right. So with that kind of volatility in the market, what can happen? One can make big loss, they can also make big win. However, since you may not know how you want to trade this as a new person in the market, you can simply avoid trading that particular instrument for that period. So for instance, 1:30 p.m. Nigerian time, we have PPI report for the US, and it is also rated high. I can decide anything from 1 p.m. or even 12 noon. I'm not going to trade anything that has US dollar in it. All right. I can leave it after the news, like 1 hour later, the market would have settled down. That may be the time I start to trade the market again. Welcome to the class. Tunde, good to have you. I think we have one other person unverified. Who is that? Is that Segun? Segun, are you back?
Yes, ma'am.
Okay, welcome. So I will
Number.
just quickly welcome to the class, everyone. So I'll just quickly round off some of the session and then Segun will continue from where we stop. All right. So I start with fundamental. I now have an idea. Okay, there's going to be news in the afternoon. My fundamental analysis may be limited to, okay, I'm not going to um and I'm not going to trade like 1 hour in between around that period. The next thing I'm going to then do is I'll come to my charts and I'm going to analyze the structure of the market. Okay, that is what I have there, market structure analysis. And this market structure is basically the trend. You are trying to know what direction the market is taking. Are we in an uptrend? Are we in a downtrend? Is it a sideways market we have? And when I analyze that, I'm going to use multi-time frame analysis. What is multi-time frame analysis? I look at weekly, I look at daily, I look at maybe 4 hour time frame. That's for me as a swing trader. If you're a day trader, you can look at 4 hour, 1 hour, and then you look at 15 minutes, and then you make your decision from 15-minute time frame. Why do you need to look at other time frame apart from the time frame you like to analyze from? Because you want to like have an idea of what's happening, the bigger picture, mid-term picture, and the short-term picture of what's happening overall in the whole market. Not like you're going to trade from that daily time frame if you're a day trader, but you want to see the bigger picture of this trend. This uptrend I'm seeing on 15 minutes, is it really uptrend on the daily as well? Because one daily candle is 24 hour. So we have 24 of the hourly candle making up one day candle. And then how about on 15 minutes? 24 times 4, right? That will make up the one candle you are seeing on the daily. So you necessarily do not have to trade that daily time frame, but at least check it, have an idea of what's happening there. That way you will filter the noise that you see on the lower time frame because you now have an idea what the major direction of the market is. So I see an uptrend, say on the highest time frame I check, I see an uptrend again. So for me that I like to check weekly, daily, and 4 hour. If I see an uptrend on the weekly, I see an uptrend on the daily, and then on 4 hour, I'm seeing that it's tilting to the downside, looking like a downtrend. What will I do? I will really go back. I will check and really be sure. Is this trend that I'm seeing on the uptrend the main one, or is it now taking the trend of what I'm seeing on the 4 hour? Sometimes I will discover that on the weekly, the current weekly candle is bearish, while all the other ones have been bullish, making it an uptrend. That bearish, which is just correcting, is why on the 4 hour I'm beginning to see a downtrend. All right. So now I know, okay, this downtrend I'm seeing likely is not going to last long because it's just a correction. So what do I do in that case? I wait and let the correction complete, and then I look for a buy to join the major direction I see on the higher time frame. In that case, I am not just chasing what the market is doing. I have a focus. I know what I'm looking for. So another thing I'm going to check is current market bias. What is current market bias? What the market is doing now? Because sometimes you may see an uptrending market. You may see an uptrending market, like this. Market is trending up. However, at this time, we are now somewhere here, which is a major resistance level, right? This is clearly an uptrend before, but we are now somewhere here. What if it gets to this resistance level and unable to break it to the upside? What can happen? It can start coming down again. So if I see that the current market bias likely may make a push to the downside, I won't just start buying right away just because, oh, the higher time frame is showing an uptrending market. Where are we? Because the market may get to a point where it is about to change direction, move away from that uptrend into a downtrend. So I need to be clear of that. And that will give me an idea of the current market bias. So now, assuming that everything, all my structural analysis, my current market bias and everything is still telling me I should look for, say, a sell, right? that way I now have an idea what I'm looking for. That is when I'll now go bring out my setup and say, okay, what will I see, that what do I have on this chart that is supporting a sell? And I'm sure you've learned different strategies for the classes you've been joining us. Shibomi teaches break of structure, different strategies. Segun will teach you support and resistance, or demand and supply trading. It teaches you is different strategy. I love to teach patterns and different way of taking trading the market. So whatever it is that your setup or your strategies, this is when you now use it, because you already have an idea what kind of trade you're taking. You now look, is there a setup that fits in with the buy I want? This way, you are trying to follow the direction of what the market is showing you. You are not just bringing out a new direction just because you see one setup somewhere. Your setup should align with what you have decided you're going to do based on your analysis of the structure of the market. Now, you look at the setup. For me, it might be this pattern. This is like head and double top pattern. So price gets to that resistance, it touches it and bounces back down. This area is my neckline. Once the price closes above it, I start to sell, because at that point, a lower low has been created for me. So I start to look for a sell. I also will not enter immediately. What will I do? I ask myself, are my entry rules met? Because aside from seeing a setup, there should also be something that tells you when to enter. For me, the setup may be, oh, this pattern, it forms head and shoulder, or is breaking that structure. Okay, as that breakout happens, that breakout is what gives me the go ahead to do my sell or my buy. So that breakout, it could also be, sometimes I'm looking at, I had moving average to my chart and I'm saying it has to close below that moving average or above the moving average, as the case may be. It may also be the candlestick pattern. I'm looking for a pin bar, an engulfing bullish candle, engulfing bearish. I just have to ensure that everything is set, fitting in with my entry rule. Then before I finally enter, I'm going to do this. I'll compare my risk to reward. How do I know what my risk is? Before I enter, I want to know where my stop loss is going to be. If I'm entering here, my stop loss will likely be above the last high if I'm doing a sell. If I'm doing a buy, maybe the price is here and I want to buy, my stop loss will be below this low and my entry will be here. So I need to know where my stop loss is going to be and where my take profit is going to be. When I determine where I will enter and where my stop loss will be, where my take profit will be, I'll now be able to compare my risk to reward. I'll calculate the number of pips from entry to stop loss. Say it gives me 20 pips as my stop loss. How many pips is in my take profit? If it is 40 pips, 50 pips, 60 pips, very good. It's more than times two of the expected risk. Why? Because you are still going to make losses sometimes. It is not every time. There's no strategy. If anybody is telling you that there's a strategy that wins 100% of the time, they're only lying to you. No strategy wins 100% of the time. There are going to be losses because the market condition can change. But what is important is the few that go your way. Let's say it's 50%. You take 10 trades this week, 5 goes your way. That's 5. Are they giving you double of what you are losing? If I'm making profit, I'm making $40. I'm losing only $20. In that case, that's like double. Please, can you mute yourself, everyone, so that your voice does not affect the class? All right. So my win should be bigger than my losses if the market goes against me, so that if I make some losses, the wins will cover up. Right. Then the next thing that would help me ensure that I'm not losing more than I plan to lose is to calculate my lot size. What's my lot size? Position sizing. I'm very sure all of you know how to calculate it. You can go online and search on Google for position size calculator and calculate your position size by that. And then you enter the trade. So that's a simple process I like to follow. But remember, setup is what a lot of people focus on. It shouldn't just be about the setup. To filter the noise and know exactly what you want in the market, start by checking the trend, market bias and all that. I'm very sure Segun also has other ways that he likes to reduce the noise in the market and zoom in on exactly what he wants to do. So Segun is going to take over and is going to be showing you how he analyzes the market. So over to you, Segun. I'm handing the class over. You can go ahead
All
with
right,
your.
thank you. so much, man.
Yeah.
That was a wonderful one.
Thank you.
Honestly, I don't really know what to say, but it is well.
You're welcome.
All right, all right. Thank you so much, man. All right, Mr. Didelu, Mr. Mandara, Mr. Tunde, you're all welcome. So as usual, let's go to the chat. So we'll be checking some opportunities that we can be able to take advantage of. So quickly, let me share my screen. All right. So I believe you can all see my screen, right?
No, sir.
Okay. All right. So
Your
one thing
screen
about
is not
analysis.
showing, though. Or is it just me? I can't
Yes.
see your screen.
Okay, maybe it's here too. Before it starts sharing. So there's one thing about analysis that you all need to understand. Uh, most people just want to dive into the market. They want to just go and look for a buying opportunity. They want to go and look for a selling opportunity. But then the essence of this time frame, just like what I mentioned just explained just now, multi-time frame now. Now I can't just go to 1 minute or the 5 minute time frame to go and check what opportunity is there. So there's what we call longer buyers, there's what we call short-term buyers. I know you might not necessarily see all of those things on 5 minute time frame or on 10 minute time frame or any time frame you could ever imagine. So you have to go to the higher time frame. And whenever I talk about higher time frame stands from 4 hours, from daily, from weekly, from monthly. And now, what do we use this higher time frame for? We use the higher time frame now to check the long-term buyers. We use it to identify the overall market structure. Market structure is just you being able to know who is in the market, right? You want to know whether we have buyers in the market. You want to know whether we have sellers in the market. And with the help of market structure now, you can't be able to tell which of that is happening. So with the market structure now, I can be able to know if I should be going for a buy or if I should be going for a sell. So that's the reason why most times we start from the higher time frame so that you can be able to know the actual direction of the market. Now, once you are done with the direction of the market now, we have two types of trend. We have the bullish trend and we have the bearish trend. And we say that the bullish trend it comprises of the higher highs and the higher lows, and the bearish trend comprises of the lower highs and the lower lows. Now, let me give you an hint now. So now, if on higher time frame now, I'm seeing that this is a bullish market. Now, I can't just enter that trade on that particular time frame, because imagine me taking a trade on daily time frame or weekly time frame, my risks tend to be much. I don't even understand. My risks will be what? Will be much. So that's the reason why I have to navigate to a better time frame or a lower time frame. So the other time frame that we have now is now called the mid time frame. Mid time frame now, anything from 1 hour, 45 minutes, even 2 hours is classified as a what? A mid time frame. Now, what do we use the mid time frame to do now? We use the mid time frame now to be able to check our points of interest. Now, that's the reason, because maybe on my high time frame now, it has given me an hint that, oh, this market is a bullish market, right? So now I need to go and look for point of interest. POI. POI means point of interest. I need to go and look for point of interest for buy. The reason, because I've been able to see that, oh, this market is for buyers. So I will have to go to the mid time frame now to go and look for my point of interest. Now, my point of interest could be my support and resistance or my supply and demand. They are all same. It's just that they have little terminologies, but they are all same. I don't understand. So I'll go to my mid time frame now to go and look for my point of interest based on what I've seen on my higher time frame. I don't understand. Based on what I've seen on my higher time frame. That's the reason why I have to go to my mid time frame. I will go to my mid time frame to go and highlight zones on the 2 hours, on the 1 hour, on the 45 minutes time frame to go and look for my point of interest, my possible demand zone, or my possible supply zone, or my possible support zone, or my possible resistance zone. We say that resistance is a region where we have potential sellers, then support is a region where we have potential buyers. Same thing with supply and demand. Demand is a particular region now where we are expecting more buys, right? While supply is where we're expecting more sales, right? So now if I've been able to do that now on my mid time frame now, because I have to start from my higher time frame, right? So I'll go to my mid time frame to go look for my point of interest now. Then I will now go to my lower time frame. My lower time frame is what we call anything from 30 minutes, 15 minutes, 5 minutes time frame, even 1 minute time frame is classified as a what? As a lower time frame. It's classified as a what? As a lower time frame. So can you see the way I was able to navigate from the higher time frame? I'm just explaining it theoretically now. I'm going to use one of you now to explain it practical so that you understand what I'm saying. I know I told you, Mr. Madara and Mr. Didiolu, that you'll be sharing your screen for us in the next class. Now, the essence of this now is not to mock anyone or not to show that you don't know how to trade. The essence of this now is to improve you. If you ask Mr. Tunde, when he joined Money Sellers Academy now, he wasn't able to do anything on his own. Back then, when I asked him to share his screen, he used to be shy. Not because he does not want to share the screen, but he felt that he's still a newbie. But for now, he's one that he always disturbs me that he wants to share his screen. Reason because why? That's because he has been able to build confidence. He has been able to do it by himself, and that's what you'll be learning here. You're not just learning it. You're not just looking at the instructor explaining it for you. You doing it yourself gives us joy. So now we'll go to the lower time frame now from 30 minutes, 15 minutes time frame, 5 minute time frame, or 1 minute time frame to go and look for opportunity for that buy or confirmation. Because now my higher time frame has given me an hint that it is a bullish market. I'll go to my mid time frame to go and check for my point of interest. Then I'll go to my lower time frame to go and look for confirmations now. So now this is what we'll do now. Before I show you guys something now, I want you guys to practicalize it now. So Mr. Antonio will be the first person to share his screen. So based on what I just explained now, Mr. Antonio, I want you to just share your screen and do the same thing. Then I will now summarize everything. So after Mr. Antonio, Mr. Madara, Mr. Didiolu, then I will now summarize everything. So Mr. Antonio, over to you.
Good morning, sir.
Yeah, good morning. You can go ahead and share screen, please. All right. So don't worry, Mr. Didiolu, Mr. Madara, don't worry. Just do anything. Don't be scared. Nobody will laugh you. Nobody will mock you. We are all here to learn. All right, Mr. Tunde.
Can you see my screen also?
Yes, it's about to display. So just start from the weekly time frame, the daily, based on the explanation I just give us now.
All right.
I want to set up my screen from here. Just go ahead, just continue.
Okay. Yeah, I have a setup. I think I'm seeing a setup on NZJPY. So starting from the weekly time frame, from the daily time frame rather, I can see that this is an uptrend because the price is super bullish and it keeps breaking structure to the upside. So I should be looking for more of a buy than sales in this kind of a trend. So going down to the 4 hours time frame, I can see a setup, but to make it more clearer, because this price keeps breaking structure to the upside. Price keeps breaking structure at this point here. So could it be that this is a swing structure? So I'm expecting a retracement back to this point here, because I can see another block here below this place here, and there's a sweep here. So I think it's more clear on the 2 hours time frame.
Okay.
So here I have a sweep of this low here. This is my protected low. There is a sweep here, and price went back. I had to give me an inducement, my structural liquidity. So to make this my liquidity more valid, like I said in the last class, I usually use this my pre-retracement to check if my structural liquidity is in my 50% zone or at the tip of the zone. So I think my structural liquidity is somehow is valid, I say. So which makes this my buy more valid. So this is my structural liquidity, and it went back. I had to break the structure. So I'm expecting a buy from this zone here, from this demand zone here on NZDJPY. So is this my setup correct, sir?
Yes, very, very correct. Very, very correct. Keep it up. Keep it up.
All right, sir.
All right. So let me
I
down.
have
So
another
now I'll now
one.
explain. All right. You can go ahead.
All right, sir. So here I have another one on AUD rather. So starting from the daily time frame, I can also see that this trend is an uptrend. It's super bullish. So I'm looking more of a buy than sells in this kind of a trend. So I can see the market reacted from this point here. So this is what is pushing the market to the upside. And
Okay. I think your screen is not showing.
is it showing now, sir?
Not yet. Maybe you can reshare it again.
All right.
Okay. Before then, let me quickly share my one. Okay.
Is it showing now?
Okay, it can show now, right?
All right. Okay.
Yes, yes, it can. You can go ahead.
Okay. So on the 2 hours time frame, so I can clearly see a setup here on the 2 hours time frame. I think,
All right.
okay, there is a sweep of this low here. This is my protected low, and there is a zone here where market is actually reacting from, and this is my
Yes.
structural liquidity. Here is my
Yes.
structural liquidity, and to make this structural liquidity more valid, to check if it is valid, I use uh my
Retracement.
pre-retracement as well, which is the liquidity is inside it has tested the 50% zone, so which
Okay.
makes it valid, I think.
Right.
So and here now, I think market is probably coming down to this zone before reacting. So anything can happen from this zone now. Yeah, at any time. So and I have another one on USDJPY, but I don't know if market is actually coming back to that zone.
All right. Let's see.
So yeah, I'm using my Pandomodo reversal, like the QMR entry. Yeah. So from this
Okay.
point here, because there
Okay.
is a few other block here, which I'm expecting price to react from this QMR here. So
Yes.
here is my liquidity, the pullback. But let's just quickly check from the daily time frame why the market is reacting from that. So yeah, I can see that the market is clearly reacting from this demand zone here. And just like you said earlier now, if market is reacting from a demand zone, we should be looking more of a buy than sales in the market. So on the daily time frame as well, I think market break the structure. Market took out the structure here.
Okay.
Is that correct, sir? And
Yes.
I have this. So this zone here is a demand zone. So I'm expecting buy in this from this zone here. So going down to the 2 hours time frame, that's when I saw this setup in 2 hours time frame. Here is a pullback here.
Right.
I think it's more clear on the 1 hour time frame rather.
1 hour.
So, but sir, can you see my screen now?
Yes, very clear.
So I think market should respect this zone because I think it might probably I think there is news today on USD. I'll check if
Yes,
price
there's a news
can
on
that
USD.
can push it
Going to
down
be
to
better
this.
today.
Okay, okay.
Yes.
But I
But
don't think
nice.
I'll be trading breakout block anymore. There is a setup I saw yesterday. I'm coming on breakout and market like virtually took me out before going back up. Coming.
Okay, on GPS, right?
No, I'm
Or
coming. I will see the setup now.
Okay.
Because the reason why I took the trade was I saw an expansion to the upside, but market did not even expect it at all. Okay, this is it.
Okay.
So here, there is a question I want to ask as well. You know that the other
All
time
right.
I asked you that like most of my setup is not broken as like before. So you told me that
Okay.
if I'll be taking any setup, I should be making sure that my like market hasn't tested any zone here. That it should be a fresh setup.
Okay.
But after seeing
Okay.
this
Okay.
expansion,
Yes.
this is an expansion, right? This is an expansion to the upside.
Yes.
So
Yes.
market didn't respect it at all before moving back up. But I set my stop loss around this point there, and market took me out before eventually going back up here. So this trading
Yeah.
breakout block at times for me is not it actually always play out fine, but
Yeah.
it's part of the market, shark. But this setup is valid, sir. Is it valid? Because I see a pullback here, and the pullback hasn't tested my zone yet. So the pullback went ahead to break the structure. But market did this
Okay.
before eventually going back up to the upside.
Oh,
So
that's a good one. Let me explain something so that for others too, so they can.
all right, sir.
That's a good one, Mr. Keep it up. That's a good
All
one.
right.
Let me show something so that I will show it to that Mr. Didolu and Mr. Moderator can be able to replicate same thing too.
All right.
So let me share my screen. Is it sharing now?
Not yet.
What about now?
Still
No.
not showing. Just just showing O.
Okay, Minister Tune, you can continue.
Okay, it's not showing.
You can continue from your end, don't worry.
Okay. So there was this buy I took yesterday and I actually capitalized on. Can you hear me, sir?
Yes, we can.
All right. There was this buy I took yesterday I took advantage of. And market actually respects my I don't know why this one is not showing me. All right. Can you see my screen?
Yes, we can.
Okay, okay. Come on. So there was this coming. So there was this buy I took yesterday I took advantage of. So yeah. I think, okay. Yeah, from the daily time frame, I see that I can clearly see that markets is actually reacting from this zone here. Can you hear me, sir?
Yes, very clear.
All right. So I can clearly see that on the daily time frame, I can see that we have this uh bearish engulfing back, or this candle it engulfs this bullish candle. So market is actually reacting from this point here. So going down to the 4 hours time frame, so I can see the market is an uptrend because we have this break here to the upside here. So, but on the 2 hours time frame, there was a setup I saw last week, which I actually missed somewhere around here. So I was anticipating to use this breaker here because I have this pullback as my inducement. So the pullback went back to break the structure. So I have this break of structure to the downside as well. So, but going down to the I didn't see this in time. So going down to the 30-minute time frame. So I was actually expecting market price to react from this breaker here, but market did this rather. So I have this sweep here on 30-minute time frame for a sell, and this is my protected high. This was my protected high. I missed this trade, but this yesterday I saw a buy. I caught a buy on this Euro AUD. So where I have this inducement here, my structural inducement here, and the inducement went back to break the structure. So market came back to tap into the zone and went down massively. And I think it was even up to 1:10 self. But yesterday I saw this setup on the 30-minute time frame here. I can see that there's a sweep here. Is that correct, sir?
Wow. Yes, very true.
So there was a sweep around this point here. So I was using the QMR entry because I can see that after this, after market have tapped into this zone multiple times, I can see that from this point here, it looks fresh, and the pullback went back ahead to break the structure, so which makes my structural liquidity more valid. So using the I'm coming. So to confirm if my structural liquidity is more valid, just like I've always doing, I like to use this fib retracement to confirm my inducement if it is valid, and it has tapped into the 50% zone. So that's why I was taking this buy yesterday, and markets expected it. So it went up massively from like 1:3. Can you hear me, sir?
All right, that was good. That was good. Wow, this is a nice one. So I don't know, Mr. D. Yeah, I can hear
Hi,
you.
here.
All right, can I stop sharing
What
now?
did you say?
Okay, Mr. Madara, Mr. Didiolu, are you in a hurry?
No.
Okay. What about Mr. Madara? Can I just get like 20 minutes of your time? Mr. Tony, are you in a hurry too?
No, no, no.
All right. Maybe I will send a link on the Telegram, the Zoom link. Because I don't know why this one is not going through. There's something I want to explain for you guys so that you guys can be able to make use of it. So, is it allowed?
Yes.